Welcome to Driving the Line, the pursuit of safety, where we talk about the real issues out on the road, focus on safe driving, and learn industry best practices from your hosts Kenny Ray, Mike Bohan, and Jim Seibert, in the hopes that by driving the line, we get more drivers home safe and sound. This podcast was made possible by Marsh McLennan Agency.
Welcome, folks, to this episode of Driving the Line, the podcast that is always in the pursuit of safety. This is Kenny Ray, along with Mike Bohan and Jim Seibert, and we're coming to you today with a topic that may seem a little unusual at the start, but I think by the end of the podcast, you'll understand why we decided to visit with you today about this particular topic. We're going to talk about insurance, specifically some of the regulations on financial responsibility out of the Federal Motor Carrier Safety Regulations. Now, I want to preface this conversation, and I will repeat this again before we're through to make sure that I want everybody to understand the three of us work for an insurance brokerage. We seldom ever talk about that. The purpose of this podcast is not for us to sell insurance. We are all three safety guys. That's what we do. We are safety people. We're proud that we work for an insurance brokerage, happen to be the largest one in the world. It's a big outfit, and we do a lot of different things. But one thing the three of us don't do, we don't sell insurance. We are not licensed insurance agents. And the purpose of this particular podcast is not, please listen to me carefully, it is not to offer any sort of insurance advice or legal advice. That needs to come from your insurance agent, your broker, your producer. We are their safety guys. But one thing we are qualified to talk about, and one thing we absolutely have authority to talk about, is what does the Federal Motor Carrier Safety Regulations say about insurance? What comes out of the Green Book, as truck drivers like to call it? And that is what we're going to share with you today. We're going to be in part 387. And when I use the word part, every one of us remember when we were little boys and little girls, when you open a book is divided into chapters. Well, the federal government, instead of calling chapters, they call chapters parts. So part 387 of the Federal Motor Carrier Safety Regulations is the chapter, if you will, within the Federal Motor Carrier Safety Regulations, where the minimum levels of financial responsibility for motor carriers, and that's actually the title of the chapter or the part, minimum levels of financial responsibility for motor carriers, those rules are laid out. It's a relatively small chapter. It's only about 11 pages long in the book. It's dwarfed by some of the other parts, but it has a lot of important information in it. So what we're going to do today is share with you some thoughts, and the whole idea, the entire purpose of this podcast is one thing, and I'll make this very succinct. The purpose of this is for you listening, whether you're the owner of a trucking company, you're the CEO of a trucking company, you're the safety director of a trucking company, you're an owner-operator that owns your own truck and trailer and either has your own authority or you're leased to somebody. But it's for you to pause and ask yourself, do I have the right kind of insurance and do I have the right amount of insurance? That is what is the purpose of this podcast. And if the answer to that is confirmation for you, yes, I'm great. I have the right kind and the right amount. Kudos to you. If you find after we've had this discussion that you're not sure about the answer to that question, do I have the right amount and the right kind? Or you sit and say, you know what, those guys just made me realize I don't have the right kind or the right amount. Then the next thing you need to do is call your agent, whether that's one of our coworkers or whoever you happen to be with. We're not here today pushing insurance. We're here today to make sure you're in regulatory compliance with some very, very, very important laws that are found in the Federal Motor Carrier Safety Regulations. So again, the entire purpose of our podcast today is to make you tap the brakes and pause and say, am I good in terms of regulatory compliance with the amount and the kind of insurance that I have? So we're going to get into part 387. We're going to share with you some things straight out of the regs. And then Mike and I will visit with you about some of the things we see in terms of practical application of these laws out on both on the side of the road and in audits. Jim, y'all know Jim is our OSHA expert. He's also our ag guy. He deals with all of our agricultural clients. And Jim's going to share some thoughts that are applicable to some of the ag clients that actually operate their own fleet of trucks and some of the products they carry and how that brings them under this chapter as well, or under this part of the insurance requirements from the Federal Motor Carrier Safety Regulations. So what is the applicability of this? Well, it's defined right in the first part of the reg. It basically says that this part applies to for-hire motor carriers operating motor vehicles transporting property in interstate or foreign commerce. And you'll notice that intrastate is left out of that. Now, y'all know I'm in Texas, Mike's in Missouri, and Jim's in the great state of Oklahoma. And we all have motor carriers that operate exclusively within the confines of our state. And on those particular situations, if they're an intrastate carrier, they're going to fall under whatever the state law is for insurance requirements on commercial motor vehicles. So if you operate totally intrastate, whether you're in Texas, Missouri, Oklahoma, or wherever you happen to be, then you need to check with the state, because every state has a little bit different laws about that. But there is one exception to that. If you're in the hazmat world, with placarded amounts of hazmat or some of the really specific hazmat, you fall under the federal rules, even if you're an intra-state carrier, even to the point that FMCSA gets down to a granular level on some products. And let me share with you real quick what those are. If it's a division 1.1, 1.2, or 1.3, those are explosives. Okay, so if you're hauling any of the 1.1, 1.2, or 1.3 explosive materials, or you're transporting any quantity of a division 2.3, which is a poisonous gas in hazard zone A, or division 6.1, which is a poison that's in packing group 1 hazard zone A, that means it's an inhalation hazard poison, or you're transporting any amount of a highway route controlled radioactive material, which is a class 7. Now, I want to make this clear, because particularly in my state, in the state of Texas, we have some folks hauling some of those things in half-ton pickups. You literally could haul some of that stuff on the back of a motorcycle. And if you did that, you are under these regulations for the federal hazmat regs and the insurance requirements that go along with that. So I guess my point about that is, if you're in the hazmat world, you need to pay very close attention to these regulations, these requirements on insurance, because that's where it gets tricky, is on the amount of insurance that's required for a hazmat carrier. Now, y'all have heard us on previous podcasts. We have talked about that there are some of the class 9 hazmats that don't require placards. There's some of the regular hazardous materials in small quantities that don't require placards. And one of the interpretation questions out of this chapter of the regs, again, we're dealing with insurance, specifically asks this. It says, are motor carriers transporting hazardous material that are covered under exceptions to the hazardous material regulations subject to financial responsibility regulation? Now, let me tell you what that question means. That question is asking, if I'm hauling a hazmat, but I'm doing it under an exception that has been granted to me by FMCSA, the Pipeline Hazardous Material Safety Administration. Let's say that I'm hauling a material that FMCSA says, if you're hauling this, you don't have to have placards. Or if you're hauling this, you're exempt from all the regs, the hazmat regs. What this question's asking is, if you're hauling one of those materials, even if FMCSA has granted you an exception, are you still under the insurance regulation? And FMCSA's answer is very, very clear. They say yes. Even though a hazardous material may be covered under a packaging, placarding, transportation, or other exception to the hazardous material regulations, if the item meets the definition of a hazardous material, it is still considered HM for the purposes of Part 387, which is the insurance requirements. And they conclude by saying the motor carrier must still provide for financial responsibility at the appropriate level for the commodity being transported. And ladies and gentlemen, listening to this, that interpretation, that question right there is really what caused us to decide to put this particular podcast together, because there are a number of motor carriers. Some of y'all listening to this podcast, I know you are because you tell me you listen to it and you're my clients and I know what you transport. Some of y'all are hauling Class 9 hazmats that do not require placards, and it exempts you from a lot of things, okay? But what this reg is saying is, even if you're exempt from various parts of the hazmat regs, you're not exempt from the insurance requirement. So if you're hauling a hazardous material, even if it doesn't require placards, you are subject to the insurance requirements for hazardous material. If you don't get anything else out of this podcast, I hope you understand that, okay? All right. Now, staying in the regs, most everybody has seen there's a little chart that the Federal Motor Carrier Safety Administration put into Part 387, and it's a chart that's found in Part 387.9. And it basically shows the 4 levels of insurance and what vehicles and what types of products fall under those. And Mike, anytime you want to join in or make comments about any of these, feel free to do so. But you and I both know the basic plain Jane amount of financial responsibility or liability insurance that's required for a non-hazardous material motor carrier is $750,000. That's the amount they got to have. That's what's got to be on file with FMCSA. So, ladies and gentlemen, if you're out there and you're a flatbed outfit, you're a reefer outfit, you know, you run dry box vans, and you absolutely never, ever, ever, under any circumstances, put hazmat in the back. Or you may be a tanker outfit that doesn't haul hazmat. You haul water, or you haul milk, you know. But anything other than hazmat, $750,000 is what you got to have on if you're an interstate carrier. Again, if you're intrastate only, then you fall under whatever your applicable state regulations are. But this chart gets progressively more complex after we get over that initial basic hurdle. And then where it gets into is when we start talking about the various levels of the insurance that's required for hazmat carriers. And basically there's 2 levels. There's $1 million for what we call just the regular or routine hazmat. And then there's $5 million requirement for what is often considered the baddest of the bad. But however, even within that $5 million, there is one part of that regulation that is very, very confusing to folks. And let me just, first of all, let me share with you who this affects. It's for hire and private. So both for hire trucking companies and private motor carriers, those that haul their own stuff in interstate, foreign, or intrastate. So this covers everybody as long as you're over 10,001 pounds, okay? And then there's actually a requirement for vehicles that are less than 10,001 if they're hauling those materials I named a while ago, which are the 3 divisions of the explosives, the Class 1 explosives, the poisonous gases in Hazard Zone A, or the Division 6.1 poisonous materials with inhalation hazard, or any route-controlled amounts of a Class 7 radioactive. Those are $5 million products, even if you're hauling them in a half-ton pickup or even, heaven forbid, on a motorcycle. You would still have to have $5 million insurance. Where it gets tricky is the $5 million requirement that don't include those. Those are pretty simple. If you're hauling explosives, you're hauling radioactives, you're hauling inhalation hazard poisons, you pretty much are going to be in the $5 million world. It's the other part of that is confusing, and particularly it's this, okay? The reg says hazardous substances, as defined in 49-171.8, transported in bulk in cargo tanks, portable tanks, or hopper-type vehicles with capacities in bulk. That's what brings people into the $5 million or the $5 million requirement for insurance. Now, what's tricky is people that do not come out of the hazmat world need to know that words have tremendous meaning within the hazardous material community. And hazardous substances are those products that have been identified by the Environmental Protection Agency that are found in Appendix A to the hazardous material table Those are hazardous substances if they're transported in their reportable quantity. And if you're not sure about that, reach out to me, reach out to Mike, reach out to whoever your safety person is, reach out to whoever your hazmat expert is, and let us explain that, because these are extremely technical definitions. But if you're hauling a hazardous substance, which means it comes out of Appendix A of the hazmat table and it's in its reportable quantity, and you're doing that in bulk in either a cargo tank, a portable tank, or a hopper type vehicle, that thrusts you into the $5 million insurance requirement. So, Mike, share with the audience, just looking at the definitions in Part 387.5 out of the Federal Motor Carrier Safety Regulation, because it used to define, the chart actually used to say in containers or in packages that had a capacity of greater than 3,500 water gallons. They've now changed that to just say in bulk, but then it refers you over to the actual definition of what in bulk is. And that's where we pick up again the 3,500 water gallons. So share, if you would, what the regs say about transporting these hazardous substances in bulk.
Well, and I think we'll just jump into that definition. If you look in 387.5, in relationship to insurance in bulk, it means the transportation of cargo, property, except Division 1.1, 1.2, 1.3 materials, and Division 2.3 hazard zone A gases in containment systems with capacities in excess of that 3,500 water gallons. In bulk means the transportation, and this is Division 1.1, 1.2, 1.3 explosives, means the transportation as cargo of any Division 1.1, 1.2, 1.3 material in any quantity. And then in bulk, Division 2.3 hazard zone A, or 6.1 packing group 1 hazard zone A, which is the divisions you mentioned earlier, means the transportation as cargo of any Division 2.3 hazard zone A or Division 6.1 packing group 1 hazard zone A material in any quantity. So that's 387.5 was how they define that. So it's important that, as you mentioned, as you're looking at this chart, 387.9, as you go down through this, that we understand, well, what does in bulk mean? Does this apply to me? And it's really going to depend on what you're hauling and what divisions of hazmat that you're hauling. And then when you go look at what types you are, you're really going to have to look at the definitions of, well, what does in bulk mean? What may or may not throw me into this $5 million range, or am I in, outside of that range? But as you go through that chart, the types of carriage that you have, that 1 through 4, there's 4 different types of carriage in there. It's really important that you understand what you're doing and the amount that you're doing it in, and determine for yourself whether or not I meet this definition. So, and you had mentioned something I wanted to, before we get too far into that, I wanted to kind of talk about those hazmats that maybe get that exemption, the class 9s, we don't have to be placarded or things like that. I remember years ago, there would be companies that were, simply put, they were landscaping companies that were hauling, just lawnmowers, and they may have some chemicals, smaller gas cans, things like that. But in Missouri, we enforce that as a class 9 miscellaneous hazmat. They weren't placarding, they weren't doing anything like that. They really fell outside the hazmat regulations. But as you mentioned, it threw them into Part 387, and they had to have that $1 million worth of insurance, and very few of them did. And in today's world, we see that more with some other types of class 9s that are out there being transported. And Kenny and I see this quite a bit day in and day out, where just because there aren't a lot of hazmat regulations that apply to you based on that interpretation that Kenny read and the guidance that the FMCSA provided, it does not get you out of the financial responsibility minimum levels of 387 that we're going through right now. So that's really, really important to know. And it, as Kenny mentioned, it really does revolve around the commodity that you're hauling and what type of hazmat it is. So just know, again, those class 9s are the ones that, you get exemptions or exceptions from the hazmat regs. It's still, this Part 387 is still going to be applicable to you. So I don't know, Kenny, as we're looking through some of this stuff, I know throughout the years, we've seen companies that have had issues with with not understanding where they fall within these regulations, how much insurance they're required to have. But I know it does cause some problems in a couple different ways. Obviously, if you have a DOT audit and you don't have the proper levels, or you're operating without proof of financial responsibility, it's going to cause you problems on an audit, but it can cause you problems roadside as well. So one of the things as we're looking at these regulations, if you look in Part 385, there's a list of critical and acute violations in there. And there are some insurance-related violations in that section from Part 387. And there's just a couple of them that we would deal with on a regular basis. There's 4 in there, but a couple of them are for passenger carriers, which we don't normally deal with. But if we look at that, there's in Part 385, there's an acute violation for 387.7A, operating a motor vehicle without having in effect the required minimum levels of financial responsibility coverage. So that's would be an acute violation of something that we're talking about here, where if you misjudge what you're hauling, or you don't get the proper levels of financial responsibility on that chart in Part 387, and then you have an audit, let's say you're required to have the 5 million and you only have $1 million, and the FMCSA does an audit on your company, and they review Part 387 with you, and they determine, well, you needed 5 million, you only had $1 million. That's an acute violation, which is one of the more serious types of violations that you can get when you're going through an audit. This can affect a lot of things. I mean, obviously there can be fines and penalties that come along with that, and it can affect your overall rating. But it's a serious violation. So it's extremely important that we understand what levels we need to have, and that we have the proper levels in place. The next one is a critical violation of 387.7D, failing to maintain at the principal place of business required proof of financial responsibility. So that is a critical violation. So one of the things that they would do if they did an audit, they would come in and say, we need to take a look at your MCS 90, which is your insurance endorsement. It's going to show your name of your company, who your insurance provider is, and then it's going to have on there what your levels of financial responsibility are, what your insurance levels are, and it should have on there whatever you need. If you need 5 million, it should show 5 million on there. If you need a million, it should show $1 million on there. So there's a couple of serious violations that you can get from an audit. One is based on just not having the proper levels of insurance. The other is not having proof of that insurance on file. Those are types of things that it doesn't matter what type of audit they're doing. If they're doing an offsite, if they're doing a focused, whatever, the FMCSA will check your insurance levels for every kind of audit that they do. So that's something that's going to be checked every time they come out. So if you've got the improper levels, or you don't have proof of that on file, you could be setting yourself up for being in violation of some pretty serious federal motor carrier safety regulations. The other side of that is what happens then when your trucks are out on the road, right? I mean, if we've got improper levels of insurance, or there's issues with filings, that's going to affect a motor carrier's operating authority, and that will be seen roadside. So a lot of times what happens is, these insurance requirements that fall through the cracks, they get notification from the motor carrier gets notification from the FMCSA. There's an issue with filings, or the issue with the improper levels, or whatever, and it affects the motor carrier's ability to operate for hire. Well, if that carries out and the motor carrier doesn't get that in the correct filings in place, or the correct levels in place, the motor carrier's authority will be suspended. So if the truck gets stopped at a scale, the inspectors will see that. They're going to place that truck out of service. It's not going anywhere, because that motor carrier doesn't then have operating authority. So there are some big ramifications when it comes to having the proper levels of insurance and understanding what those are, having the proof of it, to make sure that your trucks are continuing to operate down the road without really having any operational interruptions, which, obviously are never, ever good, because there's not a quick fix to this. Kenny, you and I have seen this happen over the years, not just with our, clients at MMA, but I mean, just over the years, you see this. If a motor carrier's operating authority is suspended for insurance related issues, yeah, you can get it fixed, but it's not a flip of the switch. It doesn't happen the same day. If you've got a truck sitting at a scale and they put it out of service because your operating authority has been suspended for insurance reasons, it's going to be an issue. There's not, hey, let's call the FMCSA, let's get them on the phone, let's get this fixed and get that truck back on the road. It's going to take a few days to get that corrected. And it's never something that a motor carrier wants to deal with, for sure.
Mike, you mentioned the consequences both on an audit and roadside. We're all aware that we know of a trucking company in Texas recently that had an audit, and they had the right amount of insurance. They are a hazmat carrier, and they needed the $1 million. However, they transport Class 9s, which don't require placards, and therefore they don't have to register with FMCSA as a hazmat carrier. And so FMCSA posted on Safer that their minimum level of required insurance was $750,000 because they didn't have to register as a hazmat carrier. Well, the insurance company filed $750,000, even though they actually had $1 million. Their policy showed they had $1 million of coverage. What they showed in Safer was $750,000, and they actually got popped. They got cited on the audit, not for not having enough insurance, but not having the proper filing. So again, it's all tied to hazmat. But if you're dealing with hazmat in any way, check and make sure, number one, you have the right coverage and you have the proper filing. And Mike, you also mentioned about roadside. The insurance, the motor carrier is required to have proof of the insurance at the business office, at the office. Now, most reputable insurance companies, and we certainly do, we issue certificates or cab cards that they can carry in every truck that shows they have insurance. But we have some folks that listen to our podcast that own trucking companies either in Canada or Mexico. If you are a Canadian or a Mexican-based motor carrier, which is a foreign motor carrier, you must by law carry proof of the insurance in the truck, not just have it back at the corporate office. Even to the point FMCSA says you can be denied entry into the country if you don't have that proof on you. So if you're operating and you're a foreign motor carrier, make sure you've got proof of your insurance in the truck itself. I'm going to yield to Jim, but before I do, and I want Jim just to for a few minutes talk about the unique application with some of our agricultural clients, but I want to encourage all of our listeners to start looking at those regulatory guidance questions that are found in each of the various parts of the Federal Motor Carrier Safety Regulation, because FMCSA tries to their best of ability to answer as many questions as you might have about any particular topic. And again, we're in Part 387 today, which is the insurance requirement, but to show you how complex this could be, I want everybody listening to this podcast to picture in their mind what we in the industry normally call a car hauler, an outfit that delivers either new or used cars to a dealership or moves them from an auction, but what we think of as a car hauler. It's an 18-wheeler going down the road. Truck tractors, well, most of them are actually full trucks and full trailers, but it's an 18-wheeler going down the road that, will have anywhere from 5, 6, maybe 7, maybe even 8 if they're small cars on it, and they're hauling vehicles up and down the road. And one of the questions that's asked, one of the FMCSA guidance questions that's asked in Part 387, and it says this: are motor vehicles being transported, which means the cars that are on the back of a car hauler, are motor vehicles being transported considered to be hazmat for purposes of the financial responsibility requirements, thus requiring the higher limits set forth in the regulation? Now, ladies and gentlemen, let that question sink in. FMCSA is asking, if you're a car hauler and you're hauling cars up and down the road, are those cars hazmat? And what they're thinking about is the gas that's in the gas tanks, okay? And their answer is this: yes, even though vehicles being transported by motor vehicle are subject only to certain parts of the hazardous material regulations, they meet the definition of a hazardous material because vehicle, flammable gas powered, and vehicle, flammable liquid powered are designated as hazardous in the federal hazmat regulations. For that reason, vehicles transporting other vehicles have to carry $1 million of public liability insurance. And my point about using that specific example, and I'm going to share one other one with you, is things that you might not think of as being hazmat can fall smack dab in the middle of the insurance requirements for hazardous material. I mean, most people, if you ask them, are car haulers hazmat? They're going to say no. And the answer for insurance purposes is yes, they actually are. And the other one, and Mike talked about this, the hopper type vehicles that are described under hauling hazardous substances. We see these. I want y'all to picture like a pneumatic tank that hauls granulated solids. They can haul sand, sugar, salt, plastic pellets, fertilizer, those sorts of things. But a hopper type vehicle is one that has a bottom discharge, and it can normally just gravity unload by opening valves or gates on the bottom, and the product just run out. We see some class 5 oxidizer fertilizers being transported in those pneumatic tank type trailers that meet the definition of a hazardous substance. So you literally could have an outfit going down the road pulling a pneumatic tank that has fertilizer in it, doesn't require placards, and yet still falls under, in some cases, even the $5 million product limit. So even our ag clients out there, and Jim, I'm going to yield to you because you represent our ag business. Our ag clients out there may be right in the middle of these various complex regulations we're talking about.
Sometimes you two make me feel like the young student attempting to grasp the grasshopper from his master's hand, the way you can just navigate these regulations and make them applicable. I'm still scratching my head on some of this, but you brought up some excellent points here. And one takeaway is that I took just from listening to you both here is the US DOT, they look at my ag clients as trucking companies.
Amen.
And that's the last thing that we think about when we're out in the middle of the country. You know, we ag companies, they live and breathe. They're the heart of the community, and they work for their farmers, right? They're small, typically small. They got a small geographical area, but the services that they provide might qualify them for increased insurance in certain aspects. And I think something that I'd really like to highlight here is looking at the quantities, looking at the configurations of our trucks that shouldn't matter, just dependent upon how much potentially hazmat or non-hazmat material that we're hauling. But, you know, what are we doing out here in the ag industry? What are we moving around? Can be propane deliveries, fuel deliveries, diesel or gas. We've got ammonia nitrate. We've got anhydrous ammonia. And these are cooperatives and farm service supply centers that are moving things around, have their own fleet of trucks. And I love the small town feel. That's why I love the ag industry. I'll never leave it. Sometimes we still consider ourselves small level farms or small level service things. And when we start to expand our business to better serve our producers, we need to, or our farmers, I should say, we need to look ahead. Even though we may feel like we are small time, that's not the way the USDOT sees us. So speaking with your insurance provider, your producers, really going through what services you provide, what materials you're hauling, in what way are you moving them, and what quantities are you moving them, and really diving in to see, are we insured to the proper level? So, who do I work for? What do I work for? The ag clients with these trucks. These rules can be applicable, and you can say, well, I'm not hauling outside a area. I'm always on back highways. I don't even touch the interstate. But we've got some ag clients that are intrastate and interstate. And so I wanted to make that connection there, that this isn't a big fleet, big trucking company issue. And it absolutely can pull in these ag clients with what they're handling and moving. They can qualify for some of these hazardous material levels that would increase the need for more insurance.
Very well said. I could not have said that any better than what you did. And so, ladies and gentlemen, listening to the podcast, just know that if we've created any questions in your mind today, that's exactly what we wanted to do. And for some of you, it's an affirmation and a confirmation that you're exactly where you need to be, and you can rest easy on that part of your business and that part of your operation. But if you're sitting there wondering, man, those guys made me think about, do I have the right kind? Do I have enough? Then the next call you need to make is to your agent, your producer, your broker, whoever that is. If you're one of our clients, you're always welcome to reach out to us for clarification of the regulation. But if you're wanting to talk to somebody about, whether or not you have the right insurance, the right filing, all that, that needs to go to your insurance agent or to whoever the service rep is that serves your client. I'm going to close with one last thing and offer my two colleagues an opportunity if they want to share. We focus today on trucking companies, but I want you to know there are parts within this chapter, again, part 387 of the regs. If you operate a passenger, you run a limousine service, you run a bus company, there's regulations that apply to you. If you're an insurance or if you're a freight broker or a freight forwarder, there are certain insurance requirements that apply to you. So if you're really involved in any type of operation that is regulated by the Federal Motor Carrier Safety Administration, then Part 387 should be important to you. Is it a glamorous section? No. Nobody really likes talking about insurance. Is it important? Absolutely. You get hammered on an audit or during a roadside inspection, and you'll find how important it really, really is. So again, let me stress, we don't sell insurance. The three of us are not licensed insurance agents, and we're not here giving insurance or legal advice in terms of policy and coverages and all of that. But what we do want to do is bring your attention to this very small chapter within the Federal Motor Carrier Safety Regulations and let you know how applicable it is, definitely, and maybe even more so than you think, to your operation. So, Mike or Jim, anything else before we close today?
Couple of things I would recommend if you're a motor carrier listening to us out there, safety director, or anybody who takes care of the insurance for your company. I would recommend going to the FMCSA site and seeing what they have you registered for as far as what insurance you're required to have, what insurance is on file. Simple way to do that is just go into that safer snapshot, put in your DOT number, and it brings it up. Go up into the upper right-hand side, click on the license and insurance tab, and it'll show you what they have on file for you as far as what insurance is required for you, the level, and then what insurance is on file. If it doesn't match up with what you think you need, contact your agent. The second point I wanted to make, if you receive correspondence from the FMCSA regarding any kind of pending insurance cancellation or anything like that, don't sit on that. Contact your agent right away. That is something that is time sensitive, and you don't want to go down to the wire on that because in the end, it does affect your operating authority. Both of those things are within your control, so I highly recommend you do. Go check out, see what they've got on file on the FMCSA side. And again, if you receive anything from the FMCSA, contact your agent. And as Kenny said, I'm going to say it one more time. We don't sell insurance, but if you've got any questions about the insurance side of it at all, if you're a client of ours, reach out to your producer, reach out to your agent. You can contact us, and we'll get you where you need to go. But as far as the insurance stuff goes, we don't handle that. But we're certainly happy to answer any questions you've got on the regulatory requirements of Part 387. So, good topic today.
Yep, Jim,
I'll jump on that first bullet point that Mike just shared there and use it a little bit in reverse. To my ag customers, the farm service providers that are out there, farming practices change. And so you getting online and checking, hey, what does it say that I'm currently carrying? What's the practices? You may either need to update or with additions, or in the case of like anhydrous ammonia, may be popular in some areas, but it's not as nearly a common practice as it used to be. And if you've got the ability to remove that, you might be able to lower some insurance costs. So it's something to always make sure that you're up to date on, given what product and services you're providing.
Outstanding. Ladies and gentlemen, again, thank you for joining us on Driving the Line. We are always tickled to death. We never take any of you for granted. We're grateful for every single one of you that listen to the podcast. We especially love getting feedback, positive or negative. So far to this point, most of you have been very complimentary about the podcast, and we always enjoy receiving that. So for Mike Bohan and Jim Seibert, this is Kenny Ray, and we're going to call this episode a wrap. And thank you once again for joining us on Driving the Line. And just remember, we are the podcast that's always in the pursuit of safety. Y'all have a great day.
That's all the time we have for this episode of Driving the Line, the Pursuit of Safety. We hope you enjoyed our discussion, and thank you for listening. You can rate, review, and subscribe to Driving the Line, the Pursuit of Safety on Apple Podcasts, Spotify, Google Podcasts, or any other app you're using. You can also follow Marsh McLennan Agency on LinkedIn, Twitter, and Facebook. Until next time, thanks again for listening. Drive safely, everyone.